This is Optimal Finance Daily, episode 884, Stocks, Part 15, Target Retirement Funds, the Simplest Path to Wealth of All, by J.L. Collins of jlcollinsnh.com. And I'm Dan, I'm your host, and welcome to Optimal Finance Daily, where I read to you each weekday from some of the best personal finance blogs on the planet. And this episode is brought to you by SendPro Online from Pitney Bowes. Shipping and mailing from your desk has never been simpler than with SendPro Online from Pitney Bowes. With SendPro Online, it's just click, send, and save for as low as $4.99. That's $4.99 a month. Try it free for 30 days and get a free 10-pound scale when you visit pb.com/finance. That's pb.com/finance. For now, let's get right to our post for today as we optimize your life. Stocks, Part 15, Target Retirement Funds, the Simplest Path to Wealth of All, by J.L. Collins of jlcollinsnh.com. Okay, so you've read The Smoother Path to Wealth and thought, oh man, 3 funds and I gotta rebalance them every year? That's too much to keep track of. But then you hit the link and it went to The Simple Path to Wealth. As you read, you thought, this is more like it, only 1 fund, this I can handle. But then you got to the part where maybe 40 years from now, as you start looking at retirement, you're going to want to add a couple more. Aw, man. J.L. Collins NH hears your pain. You need the simplest of all possible paths. You need to be able to buy just 1 fund and own it till your dying day. Any asset allocation should be handled for you. You have bridges to build, nations to run, great art to create, diseases to cure, businesses to build, beaches to sit on, motorbikes to ride. I'm here for you, Bunky. More importantly, so is Vanguard with a series of 11 target retirement funds. For that matter, so are other mutual fund companies. But as you know, Vanguard is the primo choice around these parts, so we'll be talking about these. If your 401k or similar plan offers only one of the others, what is said here, accepting expense ratio costs, applies. The 11 funds range from Target Retirement 2010 to Target Retirement 2060. The idea is that you simply pick the year you plan to retire, and that's your fund. Other than adding as much as you can to it over the years and arranging for withdrawal payments when the time comes, there's nothing else you need to ever do. It's a beautiful and elegant solution. Let's peek under the hood. Each of these target retirement funds, or TRF, is what's known as a fund of funds. That just means that the fund holds several other funds, each with different investments. In the case of Vanguard, the funds held are all low-cost index funds, and that's a very good thing. The TRFs ranging from 2020 to 2060 each hold only 3 funds: Total Stock Market Index Fund, Total Bond Market Index Fund, and Total International Stock Market Index Fund. To those 3, the TR 2015 fund adds Inflation Protected Securities Fund. To those 4, the TR 2010 fund adds Prime Money Market Fund. As the years roll by and the retirement date chosen approaches, the funds will automatically adjust the balance held, becoming steadily more conservative and safer over time. You don't need to do a thing. The expense ratios range from 0.17 to 0.19, depending on the fund. Excellent. So what are the shortcomings? Some people say the funds get too conservative too soon. Others complain that they are too aggressive for too long. For my money, I think Vanguard gets it pretty close to spot on. Maybe a bit conservative for me personally, but then I'm on the aggressive side. This is easy to adjust for. If you want a more conservative, greater percentage of bonds approach, choose a date before your actual retirement. The earlier the date, the more conservative the asset allocation. If you want more aggressive, greater percentage of stocks, just pick a later date. In deciding, be sure to remember what we learned looking at the Trinity study in our discussion of withdrawal rates. A strong dose of stocks is critical to a portfolio's survival rate, especially once you begin drawing money out. By the way, other fund companies use differing allocations for differing retirement dates. If those are what's offered in your 401k or 403b plan, you'll need to take a look and then decide, but the same principles apply. So why doesn't J.L. Collins NH recommend them? I do, actually, and am with this post. They are an excellent choice for many, maybe most people. They will certainly over time outperform the vast majority of active management investment strategies. But I do have a slight preference for the smoother path to wealth and the simple path to wealth, and here's why. The expense ratios are even lower than those of the TRFs. The TRFs all hold the Total International Stock Market Index Fund. While this is an excellent fund, I don't feel the need for additional international coverage beyond what's found in the Total Stock Market Index Fund. With separate funds, I can keep my bonds in my tax-advantaged accounts, protecting the interest from taxes. Where are you likely to find target retirement funds? Target retirement funds have become very popular as options in the 401k and 403b retirement plans offered by employers. The thinking is, and it is sound, that most people really have very little interest in investing. TRFs provide an effective, simple, and well-balanced one-decision solution. Plus, because such retirement plans are tax-sheltered, the interest from the bonds and the dividends from the stocks go untaxed. Of course, when the funds are withdrawn in retirement, taxes will be due. What should you do? If your 401k or the like offers TRFs or low-cost equivalents from another fund company, they are well worth your consideration. If you want as simple as possible and still effective, TRFs are for you. TRFs, they come with the J.L. Collins NH seal of approval. You just listened to the post titled Stocks Part 15, Target Retirement Funds, The Simplest Path to Wealth of All, by J.L. Collins of jlcollinsnh.com. And don't forget, shipping and mailing from your desk has never been simpler than with SendPro Online from Pitney Bowes. With SendPro Online from Pitney Bowes, it's just click, send, and save for as low as $4.99 a month. And for being an Optimal Finance Daily listener, you'll receive a free 30-day trial to get started and a free 10-pound scale to ensure that you never overpay. Save time and money on mailing and shipping with SendPro Online. Starting at $4.99 a month, again, that's just $4.99. You can also qualify for special USPS rates for letters and priority mail shipping, calculate exact postage online, and print from your PC. Go to pb.com/finance to access this special offer for a free 30-day trial plus a free 10-pound scale to get started. That's pb.com/finance. Experience shipping made simple with a free trial of SendPro Online from Pitney Bowes. And that's going to do it for today. Thank you so much for listening, and I will be back with you tomorrow for the Friday show, where your optimal life awaits.